Hey guys, welcome back to my YouTube channel. Welcome back to another week of fundamental analysis. This week we ended up closing our position in AJ. That was made actually on the last day of March, so the 31st of March we took that trade, which technically means we need to amend our March results. But nevertheless, let's just go through the fundamental analysis first. I'm going to show you my setups for the week, and then I will run through March 2025 and the actual results that we've made from March. So let's just start first with 7th of April to the 13th of April, my fundamental analysis. As always, guys, this is not financial advice. Please do your own due diligence, do your own research, have a feel for the market and make well-informed decisions when you are investing or putting money to the markets. COT reports this week. We still have US 30 having a huge change to the long side, NAS 100 as well. We do know this week was Trump's tariffs. He said he was going to put it on, now he's putting it off, things like that. It's just very uncertain in the markets right now. However, we do know with indices at least, there is valuation and it looks like we may be bottoming out. Who knows? I'm not going to trade it. We just got a bad economic climate right now. I don't think it's smart to to trade the indices. I think it's better to invest, buy and hold, wait for the equity to increase. But for now, I'm staying away from my US 30, which is the index that I trade for the US share market. Yen still gone strong. You can see all these volume change. Yen wasn't really affected as much. We have a lot of money coming out of US dollar, weakening of the US dollar. We have yen still strength, 86% long. We still have an increase in volume. I'm very happy to trade yen on the long side. Aussie, a little bit of strength in the Aussie as well, at least from the COT reports. But at least what I see from the economic readings for this week, Aussie is still very weak. I'm still going to short Aussie any day of the week. US dollar as well, weakness, pound weakness, oil weakness, and the 10-year bond contracts weakness. So quite a nice reading this week for my bias, especially the yen. Uncertainty with US 30, I'll be on the sidelines for that one. US data this week. So we had CPI, we had PPI as well. CPI year on year going down. CPI month on month going down, core month going down, core PPI and PPI, which are just we've added there just as extra indicators. They're not as strong as CPI or PCE, but they were neutral nevertheless. So overall, we still got that we've got that inflation coming down. We've got inflation readings coming down, and really supporting weakness in the dollar currently. We also had FOMC meeting minutes where they talked about treasury yields declining, equity price falling, the credit spread widening, dollar depreciating. There's increased perceived risk in the markets right now. I believe they said this was on the basis of not so much the readings from the US market, but the readings were still good, economic readings that is. But we know that we're trading based off the concept of being priced in. We're not really focused on the actual figures. We're focused on the change from what's expected or the forecasted figures to what's current figures. So based off my fundamental analysis, we look at all these reds here. I don't think what they discussed about numbers being strong is actually prevalent in that case. Survey respondents attach high probabilities to both lower GDP, that's gross domestic product outcomes, and higher inflation in 2025. So what I got out of that is not so much a hawkish or dovish sentiment, but more so just increased risk, perceived risk in the markets, and we've got a risk-off environment as a result. Aussie, we had Westpac consumer confidence lower than before, again adding to the bearish scenario for Aussie. RBA Bullock, I'd said it was a useless speech, just mentioned uncertainty with tariffs. It's what we already know, so nothing to gather from that. Yen, we actually have bearish reading for yen, consumer confidence going down, average cash earnings being expected but going down from last month, so not the best for yen. PPI was higher than expected, so we do have a little bit of strength in terms of inflation data. Even Ueda mentioned, economy recovering moderately, some weakness in the recent economic readings like what we mentioned here. So something to consider. Again, I think the weakness in the dollar as well as the Aussie is enough bullishness in the yen for me to take trades. I'll take a 2% trade instead of a 3% trade, which is my barrier. I trade anywhere between 1 to 3%. As a result, if I do get a nice technical setup, I'll trade at either 1 or 2%, not the full 3, because of these factors here. So going based off the graphs again, CPI coming down, year on year coming down, PPI as well coming down, just supporting that story of inflation coming down, weakening of the dollar. This is here, we just take that off, that's not new. Average hourly earnings, not new. Retail sales, not new. Take off all this, so this didn't change. The only thing that changed was inflation coming down. So this week's data, we sort of went through it. We did speak about the meeting minutes, RBA and Ueda there, so nothing to comment after that. Next week's data, we have retail sales. We have another Powell speaking. We want to see what the sentiment is. We want to see if it's hawkish or dovish. We want to see how retail sales is, the economy. A good week, but nothing crazy, nothing that's going to really shake the markets. My bias remains really the same. We said gold was neutral COT, still bullish on gold, still bullish in terms of bias. We got decreasing US inflation, which is good, can be bad. Stagflation is good. Decrease inflation, meaning money can be poured elsewhere out of the dollar, which is gold as a result, is good as well. Still a bearish US economic reading, still bearish US labor market, super strong on gold longs. US 30, we said we've got the inverse bullish COT, bearish economic news, we stay neutral. AU, both weak, neutral on that. UJ, weak dollar, slight strength in yen, we take that to the short side, and same thing as AJ. So going to the actual chart itself, we can see dollar's still coming down. We do have a little bit of rejection here. It is at a key level, so we'll be interested to see what the dollar does. It might bounce back for a short term. Yen, a little bit of consolidation. That's the only thing that I'm considering, is we've got some consolidation. We may go down before coming back up. But again, the readings I've got is enough for me to actually trade AJ and UJ to the short side. You can see here, AJ, we did get a spike up. I popped in an indicator here, an alert here. I really do need a big rejection wick here, or a big engulfing, for me to actually take this trade. I'm not going to take it off small rejections like this. It does have to be something like this, like a big hammer or shooting star there, for me to actually consider taking AJ. UJ, on the other hand, UJ, I kind of like UJ setup right now. If I was to take it, because there is a little bit of rejection here, it is, look, you know what, I want this to actually go a bit higher here. Let's play it safe. It can run down, it can most certainly run down, but let's have a little bit more candles in this area here, and if we can get a nice rejection or a nice engulfing around this region here, at least we can actually have a better stop right there. Or what we could do on the inverse is we can do a 1% risk on this, 1% risk on that, and add another percent here if it touches here, and actually scale in. I think that might be also another good entry. Let's just have a look and see the actual candle. Look, it's not big enough compared to this candle. There's not enough rejection. I'm gonna leave that alone. We'll set the alert there. It's a red, meaning it's not hit. Leave that alone. Have a look at indices just for the time being. You can see we've got that huge rejection here. A very, very nice price point. Very discounted from the top there. So we're around 18% down on that area there. I'm staying on the sidelines for this. Although we had nice rejection there, I'm not risking anything on the indices. The fundamentals don't make sense right now. They're not correlated. They're not on the same page. Gold here. Speaking about gold, guys, I actually considered this would have been a great trade. I actually considered coming in here. I hesitated a little bit. It wasn't sweeping lows. It was a nice bullish momentum though. Could have actually taken it within my rule set. Would have been up 4R, would have trailed at least to down here. Should have been a secured 2R, but it is what it is. I've got another position or another alert set here. If it does come down, we may tag in and see how this goes. So it is what it is. No FOMO. We made an educated guess not to trade that and it didn't go in our favor. So it is what it is. But great setups for next week, guys. I will catch you on the next one for fundamental analysis, that is. I'm just going to briefly go through my edited March. So March, we actually had 2 wins, 1 loss. We had a win on gold, a loss on UJ, a win on AJ. This was a 1% risk out of 10,000 USD that I'm allocating. We can see that I've took partials at 192, which was the all-time lows. We took partials here, which was all-time lows at the point, and then we trailed and got stopped out. So all up for this month, we had a win rate of 66%, 2 out of 3. We had an average risk to reward of 3.11. We had a total R of 6.22, but we had a P&L win of $1,358, which is amazing. We just made back losses for the month. Again, this should have been a win for February, but we've made back all that and some. So yeah, we're on track right now. If we go briefly to my FX book, my FX. Look, I'll have a look at this. I don't know if there's any private information that I can't show, but we're heading to a trajectory where we are profitable now. We're actually consistently profitable. We're getting to the point where we're going to be hitting our break-even point from the initial investment of the account. And if we keep scaling up, it's a no-brainer that the account's going to grow. So I'll catch you guys in the next one. Peace out.